Real quick, guys, if you could think about how you found this podcast, maybe it was on Facebook, Instagram, maybe somebody shared it with you. I don't run ads for the show or have sponsorships, so the only way this grows is through word of mouth. If this was valuable for you in any way, the only ask that I can make is that you share it with somebody else. Pass it on to the next person whose investing journey or business can be changed by listening to the show. Much love, guys, and let's get into the episode. Welcome back, everyone, to the Learn Like a CPA podcast. I'm your host, Ryan Bakey, back with a solo pod. And today we're going to be talking about tax planning versus tax preparation. Tax planning versus tax preparation. A lot of times when people hire an accountant or a CPA, they believe that the CPA or the accountant's doing right for them. They believe that they're going to get all the strategies and all the deductions affordable to them by hiring that CPA. But what you have to understand is there is a difference between tax preparation, paying someone to do your tax return, and tax planning or tax consulting, as we call it, actually having somebody advise you throughout the year in order to give you strategies or ways that you can save money on taxes. So that way, when you do go to prepare your tax return, it's a much easier experience. Let me give you an example. So a lot of people in real estate are very reactive and not proactive. So they'll go and they'll buy a few rentals, and let's say it's 2023, you'll go and buy a few rentals, you'll make a bunch of money in your business or your W-2, and then when it comes time, February, March, April 2024, you're scrambling to get your taxes prepared. And you haven't done any sort of tax planning whatsoever. You're just praying and you're hoping that you don't end up owing money. Honestly, if that is you, I know that I'm speaking to you because I see it all the time. Another story that I would say is I had a mentor that once told me that poor and middle class families know what they're going to get back on April 15th when they go to file their tax return. They either know how much they're going to owe or they're going to get back. It's the rich and the wealthy families. They know exactly how much they're going to owe or get back on April 15th. Before the prior year is even over. So we're doing tax planning for clients right now, and all of our clients are going to know exactly before the end of this year, ideally October, November, hey, here's what you're looking at in terms of how much tax you're going to owe or maybe money that you're going to get back. And here's all the things that you can do in the next 2 months to help you save money on taxes. That is the difference between tax planning and tax preparation. If you're just hiring somebody to prepare your tax return at the end of the year, when it's tax filing time, they're not actually working with you throughout the year to help and recommend you strategies or ways that you can save money. You are just crossing your fingers and hoping that you have a good outcome because you haven't been doing any planning throughout the year. The tax planning allows us to really assess your overall situation, and especially when it comes to real estate, where you might have some properties where you hit some pretty big strikes and you made a couple of big wins. Maybe some properties have appreciated a lot in value. Well, understanding your overall financial situation and having a really dialed in tax plan can mean all the difference. I mean, we've been able to value add and help so many clients because we understand their goals. That's a big part of having a CPA, is not just somebody that's going to file your tax return every single year, but somebody that understands your goals. Are you wanting to get out of your W-2 job? Do you want to help your spouse get out of their W-2 job? Maybe you like your job. Maybe you want to keep your job, but you want to have a supplemental income stream. We need to understand those goals, and that's going to be really relevant when it comes to tax planning, because then I can recommend some strategies, some things that you should do in order to help you get to your goals. One of the things that comes up in tax planning a lot. Hey guys, just wanted to interrupt the podcast to let you know that if you enjoy the podcast and the content that's in it, you would love my Tax Strategy Academy. This is going to give you the framework for developing all your tax plans for the entire year. Whether you're a long-term rental, short-term rental investor, you're going to get a one-on-one call with me to map out your tax plan, and you're going to get access to weekly office hours where you can come and ask your personal questions. So if you're interested in learning more, go check out the link in the show notes below. And now back to the show. One of the things that comes up in tax planning a lot is this concept of debt to income. You'll always hear me talk about debt to income because I believe it's the number one most important thing as a real estate investor is to protect your debt to income, your DTI, if I call it that for short. Your debt to income represents how much of your income every single year is getting this getting taken to service debt. Typically lenders want to see a DTI, below 35% in order to help you qualify for loans. Well, that's part of what we do in the tax planning and consulting phase is we recommend strategies to keep your DTI super low. So that way you can qualify for better loans, better terms, better rates when you go to buy that next deal. Another aspect of the tax planning phase is not only are we able to, again, save you money on taxes, but we're able to help you plan ahead for the future. And if you know, hey, I'm going to get $20,000 back, or I'm going to get $15,000 back, well, you could either wait until April 15th in order to get your tax return. When you go to file, you'll be able to get your refund. Or what we do, so for example, I have a client right now that we're working with. She is she's a nurse, full-time nurse. Her and her husband are both full-time nurses. They have investment properties in Panama City Beach. And it turns out that they're going to get about $30,000 back when they go to file their tax return is what we projected. And so there's two ways you can do this. You could either wait until you go to file your tax return to get your 30 grand back. Or one of the strategies that you're able to do is if you know you're going to get $30,000 back, instead of waiting until April 15th to give the government an interest-free loan and then get it back then, you can just stop withholding money from your W-2 job September, October, November, December, and you can get some of that money now this year rather than have to wait. So in this client's particular example, they have some credit cards, some HELOC interest that went into getting the properties in Panama City Beach live, and they would love to pay down those credit cards and those HELOCs, right? So understanding your overall tax situation, not being proactive and not reactive, is going to give you, not only is it going to give you peace of mind that you can sleep at night knowing that you're not going to give Uncle Sam more than he deserves, but you're going to be able to make those strategic decisions that are going to free up some cash flow for you throughout the year. Another mentor put it to me that if you really think about it, you're going to pay for it either way. You can either do nothing about your tax situation, don't ever hire a tax planner or an advisor, and you can overpay the government for many, many years. I've talked to real estate investors who have been investors for decades who have easily overpaid hundreds of thousands, if not millions of dollars of taxes over the course of their investing journey because they didn't have a good CPA. So when you think about it, you're going to pay for it one of two ways. You're either going to overpay in taxes and give the IRS, give the government more money than they deserve, or you're going to take that money, invest it into yourself and your education, and really hire somebody that you can bring on your team that's going to help you plan around, again, not only your tax scenario, but life. Help you plan around income situations. Is one spouse quitting their job to stay at home? Are both spouses going back to work? Are we both retiring? All these different types of life situations we can help you plan for as CPAs, as really good tax advisors, and that's what a tax advisor should do. So if you are still in the camp of being reactive, not proactive, you need to move over into that bucket. And it doesn't have to be super expensive either. You don't have to sign up for a super high detailed tax planning service. You can get actionable information online. I would recommend, follow all my stuff. Everything's great on the podcast. We do boot camps, trainings. I have dozens of self-paced study online courses that you can go through. But do yourself a favor. Please be proactive and not reactive when it comes to tax planning, especially as we're coming up on these next few months. Thanks for checking out the show today, guys. If you want to take the next step and see how my firm can help you with any sort of tax planning or tax preparation needs, click on the application link below in the show notes. It'll take you 30 seconds to fill it out, and we look forward to talking to you soon.